Today in the markets, Canada and UK's July inflation numbers come in under target. Kuwait is running out of money. Strong retail earnings, but malls are going bankrupt. And we got acquisitions in the healthcare sector. The S&P 500 was down 0.44% on the day, with no sectors being in that positive territory. The big losers on the day were the real estate sector and the energy sector. The Dow Jones was down again, falling 0.3%, making it a week loss of just over 1%. The Nasdaq actually fell on the day, falling 0.57%, but is still up on the week over a percent, and looking back over that 3-month mark, still up over 20%. In the Canadian markets, the S&P TSX was down 0.29% on the day, remaining flat on the week. In terms of sector, the material sector was a big loser on the day. In the Europe and Asia markets, both the FTSE and the Nikkei were up, with the FTSE up 0.58% and the Nikkei up 0.26%. Oil was slightly down, but not much. Gold, though, took a pretty big fall after the big rally that's happened the past month. It fell 3.2% and is now down to about 1,950. U.S. Treasuries remained very flat on the day. This is after a minute's release from the Fed that said that they won't put a cap on Treasury yields. But they did mention that they could possibly use this tool in the future. Essentially, what this will mean is that they'll purchase treasuries or sell treasuries depending on where the yield's at to try and adjust for the yield. In Canadian treasuries, the 10-year was up 1.5 basis points. The US dollar finally sees some strength with a rough start to the week. The Chinese yuan also had a strong day, as well as the Canadian dollar. The British pound had a really rough day, as well as the Australian dollar. The inflation numbers for Canada came out for July with an increase of 0.1%. Gas was down 15%, which brought that down. Excluding gas, it's a year-over-year increase of 0.7%. That's compared to the increase in June of 1.2%. Air travel really took a hit in their prices as it fell 8.6%. Just looking at the provinces, the big movers were Alberta, which actually had the increase of 0.9%, versus over in PEI, they had a negative 0.9%. Nova Scotia also had a negative 0.5%, as well as Newfoundland and Labrador. Interesting to see those Atlantic provinces experiencing deflation in July. Now that 0.1% rate is far below the target rate of 2% that most central banks have, as many places aren't able to get to that level. UK also released their inflation for July with a year-over-year increase of 1%, which is actually double the expectations, but at the same time, still quite a bit lower than their 2% target. It is expected, though, that the inflation rate in the UK will drop and may even see deflation in the coming months. I found this article about Kuwait startling. So what's going on in Kuwait is that currently they only have the liquidity amount of 2 billion dinars, which is approximately $6.6 billion. And they expect that they won't be able to pay the state workers past October unless they solve their issue. Some of them are looking to possibly borrow from external markets, but some of their legislators are blocking the bills that would allow them to borrow abroad. It's pretty big news for an oil giant country like this, who's known to be quite rich in that oil, and really shows you the effect of those low oil prices on a country like this, where they are possibly running out of cash to even pay their workers. They're really going to have to try and solve that. I expect they'll probably release some plan to try and borrow from external markets, but it just really shows you the impact of the falling oil prices on certain countries that rely heavy on it. Because as it says here, 90% of the country's revenue comes from oil. I suggest maybe they diversify that a lot, but that is a lot easier said than done. The budget deficit last year went up 69% to 5.64 billion dinars, and is currently this year, due to the pandemic, over doubling up to 14 billion. So they really need to try and fund that, but it seems like they're running out of cash. The demand for government treasury seems to have no end, with Germany setting a record demand for their 30-year government treasuries. So the bid totals amounted to 2.9 times the amount of bonds they were selling. They had a total of 1.5 billion US dollars worth of bonds issued at a rate of negative 5 basis points. It's interesting to see that there's this much demand for a yield that is in that negative territory. It doesn't quite make much sense to me, as negative yields really just don't quite add up unless you're entering into negative or deflation. This is at the same time as the US dollar is having its 2-year low and continues to fall. It is also announced in the US that Trump has canceled the talks with China over trade, as they have started their first steps of the trade deal. The increased intention, especially with Huawei, seems to be affecting that, and it's hard to see how that will progress in the future. In company news, we got more strong retail earnings, with Target posting a quarterly earnings of 1.69 billion, which is up from 958 billion the previous year. On an adjusted earnings per share basis, they achieved $3.38 per share, which is a massive beat of the estimates of $1.63. Their revenue also spiked, was up 25%. Strong quarter that came off the back of strong online sales and new pickup at the store. Their in-store pickup was up 60%, and their online sales surged over 100%. And they added 10 million new online customers in the first half of the year. Looking at same-store sales, they had an increase of 10.9%. This result has led to the stock surging up 12% so far today. Really strong quarter for Target, probably even better than Walmart's yesterday. But I will warn you, the 12% increase in stock price has me a little concerned, as many of these revenue gains, I don't see them being able to carry all these forward, but depends on the circumstances relating to the shutdown and stimulus checks. Things might start to slow their growth, or they might even see negative revenue growth in the next quarter as things return to more normal. Lowe's also posted their quarterly earnings and are also giving Home Depot a run for their money, as comparable sales in US stores was up 35.1%. Online sales have also driven their increase in revenue, as many stores as it more than doubled, up 135%. Their revenue totaled 27.3 billion, which is up from 21 billion the previous year, and beat estimates by a wide margin, at the estimate being 24.85 billion. Same-store sales also did extremely well, with 34.2% increase. In terms of earnings per share, their adjusted earnings per share were 3.75 and beat estimates by about 70 cents, with the estimate being $3.03. It seems like a lot of people are really doing those home projects, trying to improve things while they're stuck at home, as well as trying to purchase new office equipment and things like that, as many people have to work at home and are trying to increase their space, make things better as more people are spending time at home. Unfortunately, we don't have just good news today, as again, just like yesterday, there are companies that are really struggling in this lockdown, as they compare with big retailers that can stay open. As the mall owner, CBL Properties is planning on filing for bankruptcy, as shutdowns, rents aren't coming in, that they aren't able to cover their debt, which covers over 3 billion. This really shows you the impact that malls are taking, as many of them are really struggling to be able to pay their own debt, as stores in them are closed, aren't able to pay their rent to them, and it's just that chain effect. Malls have been struggling before the pandemic, and it really just has skyrocketed since the pandemic has started, and I expect that more properties will continue to default in the coming years, as we have already seen companies like Forever 21 and Sears file for bankruptcy. The last thing I want to discuss today is about an acquisition that has decided to happen, with Johnson & Johnson agreeing to pay up to 6.5 billion to acquire Momenta Pharmaceuticals. They make autoimmune drugs and that have been performing very well this year. Currently, their stock has been up 56% this year, but that doesn't even compare to the price that J&J is going to pay. They're paying more than a 70% premium and are going to purchase at $52.50 per share, with the closing price before this was $30.81. I always find it surprising you see these massive acquisitions and how much overpay that the companies do to try and purchase them. It rarely seems to end up working in their favor in the future. While they might perform well, it's hard to say they're not overpaying for it. When you pay a 70% premium, what are you really getting out of that? You could say there's synergies, but synergies really aren't going to be quite that much and is more, if anything, a buzzword. They aren't the only company in the healthcare industry that has been doing acquisitions, as there have been two other pretty big ones so far this year. Two notable examples of some healthcare acquisition needs happen was actually one earlier this week was French drug maker Sanofi has agreed to purchase the US biotech company Principa Biopharm for a total of 3.4 billion. It's a pretty big acquisition as well. Another one is Gilead Sciences, which have agreed to purchase 47 Inc. Back in March for a total of 4.9 billion. A lot of big acquisitions so far this year in that healthcare industry.